Yo, 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 what's up, people? Today I'm going to be going over today's trading. Today I was pretty, like, bearish going into the day. Obviously, it's kind of hard to have a bias because at all-time highs because you have to be bullish. But then at the same time, when you're on this 1 hour or 4 hour chart, like, when we just created all-time highs and we already have been move past 2.5 standard deviations, 4 standard deviations, there hasn't been a retracement yet. So we're going to typically look for a retracement back down. So I was bearish coming to the day because also the 1 hour was inversed and we needed to kind of like engineer some more liquidity before we could see any high probability moves. And the only way we can, engineer some liquidity is with market maker buy or sell models and preferably a sell model. So price is going to have to come back down to equilibrium, which it did, but I didn't expect the price to take out these like all-time highs as it did. These ones from last week, but it shot right above them. I tried to short here, but we'll go over the first trade. So this trade was just based on the fact that we took out the high right here, and the thing is that we also took out this high right here, but I didn't really base it off of that, but we did. Yeah, we did. And then price is displacing down, and we have this clean 3-minute fair value gap. I was trading on the higher time frames today, just because it look a little bit cleaner. I noticed one thing today. There's a lot lower volatility. This is not what you want to be seeing during the London session. This is not like optimal. I don't know what this is here. So this is the 1 hour inverse. As you can see, price mitigates around here and taps into it before going lower. So yeah, after this got inversed, I saw this clean singular fair value gap right here. Price closes below without taking out this low, which is the low that is created this fair value gap. So I put my stop. I entered when price started retracing back, and to the OTE, not the OTE, the consequent encroachment of that fair value gap. I put my stop loss around here to here, and I exited out of the trade pretty quickly because I was waiting for like the last couple on the 3-minute chart. I was waiting for the last minute to wait for like the distribution leg to see if price was gonna move back down, which is what I would want to see. I wouldn't want to see price closing above the consequent encroachment on, let alone closing back above the fair value gap. So price did close back above, so I just exited the trade because that's my rules. I also didn't notice, but today, FOMC member Barkin was speaking at 9 a.m. today, so I kind of decided to just kind of hold off until 9 a.m. to trade, like to put any real risk if there was a good trade, but then price just kind of started chopping around. Took out a low, ran these lows and this two equal highs right here. Price started going bearish. Once we got above here, looking for price to go bearish because if we took out the high and then we should, if we don't displace above the high, but the thing here is we kind of did displace above the high and we created a fair value gap, so that would be bullish. But the thing here is we closed below that fair value gap, so that is my entry. And I have to take my entry. So if my entry with a 60, 70, 80, 90% win rate is shorting or long when it inversed, when a fair value gap that took out a lower high is inversed, then when that happens, I have to take the model if I want the probabilities to be on my side. So I take the model and taps back into this fair value gap, closes down, closes back under this, and then stops me out. I didn't take that big of a loss on this one, so that was fine. And then I just got off the charts, It's just, if two perfectly fine inverses go my way, don't go my way, then there is no reason to try to trade more. You already had your high probability entry. You took it, failed, done for the day. Look over the price. It's okay. You can look over it in the end. But here was a good trade. So on the 1-minute chart, So price creates this clean one fair value gap. We technically take out this high, but there's no real highs, other engineered liquidity to be taken out, but we inverse back down. You could have entered here, targeting here, but that's just a shady risk to reward ratio with your stop loss right here. And your take profit right here, but price comes, and I would have just kind of had this marked out, just to balance the price range right here. And it'd be very powerful if price was to come back in and not show displacement through it. So once price did that, you could have found an entry even right here. The best of the best will place their limit right here and their stop loss right here, and tag that, and you could take off half right here just due to the fact that, or at least put your stop loss if you entered more like down here. When price hits here, you'd put your stop loss just to break even, just to conserve the risk, because you wouldn't want to have an open, floating risk of what. I mean, on here it is only 6 points, but if you're on a higher time frame, this is a 1 minute chart. If you're on a 10-minute chart, it could be 60 points, So just keep that in mind. Price quickly accelerates and would hit what would be kind of the main target, which is this, because it's just a low, mitigation block that's at that is at the OTE, as you can see here or here. We have these equal lows right here as well, but yeah, so maybe you trace back and you would have found the exit there. Then we had these two equal highs. Didn't notice, obviously it wasn't on the charts. We inversed this 3 minute fair value gap, but it's clean on 1 minute as well. We inverse it technically, we take out this internal high before, but you still could have, found an entry at least to this high, because price did not test this fair value gap, and you would have seen price probably test it if we inversed this fair value gap, at least test it. So we did. You could have found an entry right there, and your stop loss would have been these equal highs, because price is very likely to take it out, along with tap back into this range that obviously had two fair value gaps, and tapped back into before a big move down. So there's lots of orders here, as you can tell. So price sweeps this. So what you should be seeing is that it sweeps this in an area that there are large orders. So if we don't show displacement above it, we're gonna see that same reaction, kind of what happened here. Because what happened here, you see, we gotta get these same reactions from these spots where big orders are. The big orders are where the fair value gaps are. So I'm just kind of going through what my thought process is right now. And there were shorts here. No real good entries, nothing tradable. So I'm gonna delete this and kind of go into what I'm talking about tomorrow. We're gonna be making some more extensive YouTube videos, just kind of like educational in a way, but not educational for like, I don't know, like getting rich or something, just kind of for bettering myself, creating a better understanding by speaking it into this world, and by maybe helping one person or two, But trading is really just a you game. Like, at the end of the day, there's no point for social media in trading. Like, there's just 0 point. Like, why? It's just to make money. If you want to be a true trader, you have to be just you, yourself, and you, like, literally. It's a game against yourself. So once you match yourself, that's when you'll find the true probability. So coming to here, I'm going to mark, actually, I'll mark this, because this is a 4-hour inverse fair value gap. So I keep that in mind, because price will probably retrace back up and probably retrace back into the consequent encroachment of this. Come around here, probably. So I would like to see something from around here to around here. So from here to here. And then from there, we have FOMC tomorrow at 8:30, so right here. So we're going to see this move up, hold up here, and then hopefully back down. So we could see a retracement also back into the consequent encroachment of this fair value gap, or even this order block. There's obviously that stankin' old chance that price does want to come back up to react these from these wicks, but I'd probably prefer not if I'm looking to go short. Alright, see you guys.